Good evening, everyone, and welcome to our special session on the market's heartbeat before the Trump summit. We're diving into how all these geopolitical sparks and tech trends are rattling the stock bubble right now.
Absolutely. The summit's just around the corner, and the market's been on a wild ride with the AI chip leader soaring, making us question, is it all backed by strong fundamentals, or are we looking at an overblown bubble?
Right, so let's start with the macro view. You know, with the Trump summit, there's this constant buzz about whether we'll see a dramatic shift or just a political performance aimed at stabilizing expectations.
I mean, when Trump mentioned that high tariffs are not a permanent solution, it kind of gave a shot of optimism, don't you think? But is that enough to offset the underlying uncertainties?
Exactly. The real kicker here is how both sides might handle the central bargaining chips like technology sanctions and critical materials, such as rare earths, which are super crucial for AI chips.
Right. And if, say, there's even a temporary pause in the tech war, that could help, for example, supply chain stocks like TSMC's ADR. But at the same time, that situation might just pump up the bubble even more.
True. It's like you're giving the market a shot of adrenaline. If the conflict is only paused, not solved, the overvaluation risk in these chip stocks remains high. Investors need to think about setting stop-loss points tighter, especially on stocks vulnerable to tariff hikes.
Exactly. Shifting gears a bit, let's talk about the core debate on valuation, specifically regarding NVIDIA. Their forward PE ratios are astronomical compared to, say, the S&P 500 average.
Yeah, definitely. Right, NVIDIA's forward PE is roughly 35 to 40 times, while the market average hovers around 20. It's like collateral dreams fully factored into the price.
Now, I do wonder, though, isn't it possible that these high ratios are just part of the historical tech disruption cycle? Disruptive tech tends to be overvalued at first, and then creates value later.
True, but I hear you. But let's be clear. My models, based on discounted cash flow, suggest that NVIDIA's hypergrowth can't sustain past 3 years. If growth, say, decelerates from 50% to a more modest 20%, then the fair intrinsic value lands somewhere between $100 and $110 per share.
But wait a minute. Isn't the current price sitting at about $150? That's a 40% to 50% premium. Would you call that risk premium, or is it pure
Exactly.
dream premium?
Exactly. That extra premium, while it might be seen as a risk premium, really reflects the market paying for the dream of total AI dominance. And if those companies can't convert their tech into sustainable profits, we'll have a situation reminiscent of a dot-com bust.
Yeah, it kind of feels like mixing. Dreams with cash flow can be risky. I mean, one misstep and the bubble could burst, particularly with companies that burn cash for expansion.
Right. Yeah, which leads us to portfolio strategy. Given all this risk in the air, I'd advise investors to check if any single AI stock, like NVIDIA or even AMD, is taking up more than about 10% of your portfolio.
Exactly. And if that's the case, maybe trim those positions gradually. I tend to lean toward shifting funds into the application layer, like Microsoft's Azure cloud services, which are seeing more stable profit margins.
Absolutely. Right. And let's not forget, for those who fear unexpected geopolitical shifts, diversifying with hedging assets like gold ETFs or even long-term treasury ETFs can be a smart move to cushion against market downsides.
I agree. It really comes down to discipline. Remember, the market isn't a casino. You shouldn't be buying or selling solely on emotion, especially before the summit ignites more uncertainty.
Exactly. That's the bottom line here. Maintain discipline. With so much at stake, including both macro uncertainties from the summit and the intrinsic risk in high-flying AI stocks, staying nimble and focused on fundamentals is the key.
Yeah, for sure. I always like the analogy of the market's heartbeat. It's erratic, sometimes fast, sometimes slow, and a little too much caffeine can make it race unpredictably.
Right, exactly. Indeed. And while the macro event might just be a temporary showpiece, the underlying fundamentals and valuations are what will eventually determine which companies thrive and which falter.
So as we wrap up, the key takeaway is careful scrutiny of both geopolitical and fundamental risks is paramount. Whether it's the tech sanctions tied to the summit or the dream premium on PE ratios, investors need to keep a level head.
Absolutely, exactly. Yeah, and while the market continues to ride this roller coaster, our advice remains to reassess your positions, set tighter stop losses on risky equities, and diversify wisely if the uncertainties spike.
I think that's a solid call. The blend of macro view and hard valuation gives a comprehensive picture, reminding us that while the dream of AI dominance is tempting, it's crucial to be grounded in realistic forecasts.
Right, exactly. We have to view these numbers not just as hopeful projections, but as benchmarks against potential market corrections when reality hits.
Yeah, indeed. As we look ahead, keeping a cool head and a balanced portfolio will be our best defense against sudden downturns, whether triggered by political maneuvers or tech bubble burst scenarios.
And remember, investors, this isn't about chasing bubble highs, but safeguarding your long-term growth. A disciplined approach can keep you on track even when the market's heartbeat skips a beat.
Absolutely. Before we sign off, it's worth noting that while hype can drive prices sky high, it's the fundamentals and strategic rebalancing that will help weather the storm.
Right. Well said. Thanks for joining in on this deep dive. We appreciate you tuning in as we navigate these complex market waters.
Yeah, thank you. It's been a pleasure discussing these urgent market themes. Stay disciplined, watch those margins, and take care.
Thanks again for listening. We'll be back soon with more updates after the summit. Until then, keep an eye on both the macro trends and the numbers that matter.
Right on. Goodbye and take care, everyone.